After a record-breaking 2021, which was all about unicorns, it will not be an understatement to say the hype tide receded in 2022. With fewer unicorns, fewer $100 million rounds, fewer leapfrogging valuation stories, this year has mostly been about the funding winter and the slippery ice upon which the growth and late-stage startups are skating on, or at least some of them. But if there's anyone who has stayed warm, kept the fire burning on the hearth, it's the early-stage startups. And as a result, when we look at the trajectory of investments in 2022, it's clear that there is one star investor this year, the early-stage investor. Seed-stage startups have raised a historic $1 billion in funding, and Series A funding has surged to $4.2 billion in 2022. That's 50% more than what was raised even in the record-setting year of 2021, this as per data from Venture Intelligence. What's more, the average deal size for these early rounds has gone up, which offers comfort when tightening belts is the call for what could be an 18-month minimum long, difficult fundraising period. Lower burn, sharper focus, leaner operations have turned early-stage startups and investors into darlings. The tide has turned. The unicorn builder Tiger Global, for instance, has made its first early-stage bet in India this year. At least 145 micro VC firms have been set up in India over the past 2 years. And as VCs rush to refill their coffers in 2022, there are at least $15 to $20 billion of dry powder, most dedicated to early-stage growth startups. There is a rush of new funds with special focus areas: climate tech, agri-tech, clean tech, health tech, and more. And as it is rightly said, problems that need to be solved don't go away in a bear market. Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. When we envisioned the special year-end show, Investor of the Year, it was clear that 2022 has been a year of the early-stage investor. And so joining me on the show today, Dev Khare, partner at Lightspeed India Partners, Vaibhav Domkundwar, CEO and founder of Better Capital, and Hero Choudhary, managing partner at BEENEXT. Gentlemen, appreciate you joining us here on the program. Well, I guess something worked right in 2022, and I guess the work that you gentlemen have done is a reflection of what perhaps will be the silver lining through this very tumultuous period. But Dev, Vaibhav, and Hero, let me start by asking you what you made of the year gone by. Many argue that perhaps the biggest lesson that 2022 has taught entrepreneurs and venture capital investors is on the frugality of capital and the toxicity that excess capital can sometimes bring about. Dev, what would you take away as the big musings, the big lessons from 2022?
I think, well, thanks, Shireen, for having us on the show. I think maybe one way to frame it is that if you look at October, November, December 2020, if you recall, post, the lockdown sort of being taken away a little bit, the market opened up. And then you take that period all the way through to Jan, Feb, March of 2022. Those were the sort of high funding quarters in India and elsewhere in the world as well. And so if you look at 2022, the first quarter was very different. Jan, Feb, March was very different from the rest of the year. The lessons I'd take away from it is that some of what you've already mentioned, but also that fundamentals matter. They've always mattered, but we sort of, I think the ecosystem took our eye off that ball for a little while. But also that innovation continues. We see a lot of new areas continuing to come up. This year, we've made investments in the climate tech space, the space tech space, agri-tech, believe it or not, in the Web3 infrastructure space, and a number of new areas. And so innovation continues to bubble. And as early stage investors, I think Hero and Vaibhav may say the same thing. We keep investing, and good companies get founded at all times.
Well, yes, that is in fact right. The eye should never be away from the fundamentals, but I guess we go through these cycles during the boom period when all boats are rising. It looks like there will never be a down cycle, and yet we forget the lessons from the past. But Vaibhav, I want to address that very same issue with you on the lessons that 2022 has taught us. And I was looking at your tweets, and I found one which was particularly interesting. You said founders looking for 2021 valuations will be disappointed. investors looking for 28 valuations will be disappointed too. So, Vaibhav, what does 2023 hold?
Yeah, so Shireen, look, I think I've lived through the dot-com bust and the financial crisis, right? So I know what it feels like, right? So I think I'm usually very positive, but I think like they've mentioned, I think we have gone far ahead of ourselves in terms of the 2021 valuations and what we expected and what we underwrote in terms of what some of these companies can become, right? So I think we were very negative. I think I was personally very negative from the beginning of the year. And I think the day Ukraine was invaded, I actually sent out a note to all our founders within 30 minutes, just saying that, look, I just don't like the way we might see this year pan out. And unfortunately, I think it went from bad to worse, right? So I think it's really more about, I think if you were to just put everything in a nutshell, it is really about the year of reset for the Indian founders and the ecosystem, I would say, wherein you really, I mean, kind of a hard reset, right? How you reset your iPhone, let's say, where you sort of wipe out the RAM, you forget what you were doing in 2021, because you really need to, and that's what I meant in those tweets as well, that we really need to understand where we are, what we can become, and sort of replan everything. So it was a year of reset for us in the portfolio. But at the same time, I think we are also at the highest founder quality that India has ever had. So we continue to invest through the year. And I think it is going to be very important for founders to remember the lessons, remember what it felt like. And I think a whole bunch of companies have replanned and reset in the correct way. So I think 2023 is going to be about, sort of building on that plan and building healthy growth that doesn't put profitability too far away, right? Because I think sustainability is far more important in the long run. And I think 2023, we will see that companies who essentially built that strong foundation with the reset will thrive. But, if you actually still had the house of cards kind of a situation, then we'll see a bunch of them crumbling. But I think overall, I think it's a net positive, and I think we're looking forward to 2023 very positively. I think we will end up with higher quality in the ecosystem overall.
Well, that certainly is the hope, that we will be left with healthier companies at the end of this hard reset that you speak of. And Hero, I want to understand from you, are you also witnessing this hard reset across your portfolio companies? Are people making those difficult choices at this point in time? Or are some founders still not getting the memo on the fact that the environment has changed?
Yeah, Shireen, first of all, thank you for having us. And just if you take a step back and just look at this year and you think how information revolution has shaped the world over the last many, many years, it's an exponential phenomena. Over longer term, everything gets created in a very exponential way. So that being said, there are vintages, there are times when things get reset. And when you look at 2020, 2021, and 2022, it's one of those times when we are going through some of those resets. Yes, there are founders who have been focusing on building out profitable growth and profitable business model, but there are also founders who have been focusing on building out businesses with faster growth, especially if they have good amount of capital, have a very long runway, and they can win market share over this time. So we see both sides of the spectrum in the founders in the portfolio that we seeded many years ago. That being said, we think it's a really great time to be early stage investor, because founder quality has gone up a lot. A lot of noise has gone down, and we are really seeing phenomenal business models, great founders coming out. Early stage has always been and will be cycle agnostic. So we keep on investing through the cycles. And on the same philosophy as Dave and Vaibhav mentioned, we are busy in partnering with really great founders, building out businesses in climate tech, sustainability, Web3, fintech, insurance tech, and all the different verticals where we see great innovation happening.
Well, you're right in pointing out that founder quality, and that's something that we heard both from Dev as well as Vaibhav, has changed significantly, not just in terms of the ambition that these founders are willing to bring to the table, but also just in terms of execution as well. We have seen depth this time around in the last 10 years or so. But they've, two heroes point about the fact that early stage capital is cycle agnostic, and all three of you continue to believe in the power of innovation and the power of the Indian startup ecosystem to be relevant and address the issues that need to be addressed. From a future perspective, where are you likely to prioritize the use of your capital? What's looking exciting to you at this point in time? And in the existing portfolio companies, for instance, what is the guidance that you are giving out to founders today?
Yeah, I think to address your latter question first, in terms of guidance to founders, it's to not go out to market to raise in 2023, especially for growth stage companies. I think that market is still a bit locked up because founders raised at high valuations in 2021 and they raised plenty of capital. And so that valuation reset at the growth stage has yet to happen. So we are asking, our growth stage companies to, and even the early stage companies, to try and not raise and extend their capital well into 2024. I'm even hearing some of our companies have planned into 2025 now. So that's on that front. In terms of new areas, we will continue on a lot of the enterprise software type sectors, dev tools, infra, cross-border SaaS, healthcare IT. We made new investments in that area this year. In fact, this year has been more active for me than last year in terms of new investments. And then climate, B2B commerce, I think is very interesting. Areas of fintech and areas of content and gaming. We made several new fintech investments, for example, this year, including Razorpay, UB, and Acco on the insurtech side. So we're very excited about growth stage investments as well, and we're actively deploying from our global growth funds into that category as well, in addition to seed and Series A type companies. Healthcare IT, interesting area. Cross-border SaaS, we've talked about a lot. So all these areas keep bubbling along.
Yeah.
And the depth of talent continues to increase, as my colleagues have said already.
A new chapter unfolds at the 21st World Congress of Accountants, 2022, hosted by ICAI for the very first time in India. Over 10,000 thought leaders, policymakers and stakeholders from across the globe converge to deliberate on the current and the future paradigm of the accountancy profession. Watch the highlights from the 21st World Congress of Accountants, 2022 on CNBC-TV18.
आज की पेशकश
अच्छी है, पर ये चाय रोज मिलेगी?
रिटायर होने वाला हूँ, रोज नहीं, लाइफ लॉन्ग मिलेगी, ये मेरी गारंटी है।
कुछ चीजों का साथ हमेशा होना चाहिए, जैसे HDFC Life Annuity Plans, जो दे लाइफ लॉन्ग मंथली गारंटीड इनकम। HDFC Life, सर उठा के जियो।
Life will test you. It will turn your world upside down. Again and again and again. The only way to hit back is to stand up. Stand up every time and say, I'm not done.
Industry stalwarts gather to share knowledge and ideas on emerging technologies to build future-forward solutions. On IET presents Future Tech Congress 2022 at this time, only on CNBC-TV18.
all three of you to comment on this issue, but let me start by asking you. You talked about the depth of talent, but what about the depth of the market opportunity? I think many assumptions were made through the course of the pandemic on the size of the opportunity. Is there a reset on that front as well, or on the assumptions that were made?
I think the size of the opportunity is only growing. 5 years ago, they said that an enterprise software company targeting India could only be $25 million. We've got companies in our portfolio that are passing $40 million just in India, and so on. So I think that envelope, the opportunity set continues to expand. Iran goes after $1 trillion trade opportunity, and so on and so forth. So very large markets. I don't think market size is the issue. I think it's just building with profitability in mind, and not just growth.
Yeah, and that, Vaibhav, brings me to you to address both those issues, that at least perhaps in some sectors we overshot, for now, at least for the near term, the size of the market and the kind of opportunity that these companies could look at, and especially from a monetization perspective, because everyone's now talking about unit economics and don't just chase growth at any cost and so on and so forth. In that context, then, is the addressable opportunity going to be smaller as companies look at chasing profitable growth?
Yeah, no, I think that's a great question, Shireen. I think like Dave mentioned, I think the largeness of the opportunity is not a problem. I think the problem is how soon we underwrote we will get there. I think we just thought that we can burn our way to getting to that growth much faster. And I think that was obviously driven by what investors underwrote globally and what pricing they brought into those companies and things like that. So I think I'm not as worried about how small or large the market opportunity is, or worry about getting that large size. I think what we all learned and what we need to internalize is that it's going to take us longer, right? So I think we need to plan for that in terms of how we spend, how we ensure what growth metrics we are reaching with what unit economics and things like that, right? So I think in a nutshell, it is really about making sure that we are building right and sustainable companies, not overthinking, the largeness of the opportunity because it is there, but factor in the time it's going to take, right? So we just need more patience and more correct building. Right? That's what I would say.
How much more patience, Vaibhav? How much more patience are you baking into the assumptions at this point in time? I mean, how far do you push out that window? And I'll ask you this in the context of the commentary that's starting to come in, at least from some of the recently listed players. Everyone is suddenly talking about advancing being EBITDA positive. So I'm just trying to understand, like, is there a dissonance here? What do you make of it? And how much of a future runway are you baking into the fact that it's going to take longer?
Well, absolutely. See, Shireen, I think it goes back to thinking how some of these companies were built in the first place, right? So if you were built to say that, hey, I'm going to grow by paying for it, instead of saying that I'm going to build a product, make it work to a certain scale, let it compound, and let the linearity of growth not be driven by how much I'm spending for it, right? I think that's the fundamental problem. If we get that right, then I think we are going to get to a very good position, and we won't have to sort of burn through to get to a certain growth rate and then come back and say, hey, let me figure out profitability now. I think that's really, really hard. And that's what we're seeing with some of the scale companies where, it is very hard to change your DNA completely, right? So what we are factoring into our early stage portfolio is just asking the right questions much before. Asking, is the product working at the seed and Series A stage, so that we're not going to question these simple things at Series D when it becomes, it compounds and becomes much, much harder, right? So I think we will get there. I think, like Dave mentioned, the market is there. How we get there and how much time we allow is going to be important, right? So I think we probably need 2x more time just to kind of articulate a clearer answer to your question. And I think several of the companies, I think we have several founders who are patient as well. We probably don't talk about them as much, but I think they will leave enough examples for some of these companies to follow as well. So I'm fairly positive we'll get there.
Okay, Hero, let me address that issue with you as well. Where are you going to be putting your money? What kind of timelines are you now working into return assumptions?
I think Dev and Vaibhav address a lot of things very well. Profitability doesn't happen overnight. It's a mindset. A founder has to have the mindset from day one when they create a business. And they need to see that the product they are building, does the unit economics add up? Because at scale, it has to really work. If a business at some point has ambition to come public in public market, they get valued on free cash flow. They need to generate that kind of free cash flow. And to generate free cash flow, you need to have proper unit economics over longer term. So our founders and most of the founders in ecosystem we see are building out products that way now, and they are looking at it. Clearly, when you have vintages or years like 2021, when more capital chases than the opportunity available, sometimes it happens that a lot of focus goes on growth, and then team members and founders and even investors thinks that profitability can be achieved later. And sometimes there is a comeback from that, sometimes there isn't. But longer term, we think it's a very good thing that everybody's thinking about building out the businesses that should have profitable or positive unit economics that work at scale. And we think ecosystem will get there. We are very bullish on the ecosystem and all of the sectors in general.
Okay, Dev and Vaibhav, let me address another issue with the two of you. And I think one of the side effects of the kind of excess capital and euphoria that we've seen has also been linked to sort of the governance lapses that we've seen across a bunch of startups. Dev, along with this reset on the financial side that Vaibhav was talking about, what kind of a reset as an investor do you expect on the governance side, both from a founder's perspective, but also from an investor's perspective, because both will need to be at the table addressing these issues?
I won't call it as much a reset as, over the last 10 years, venture capital got started in India in 2006. So it's been about, 15, 16 years. As time has gone on, the level of governance has continued to increase. And by and large, a lot of the founders in India are very much pro strong governance, whether it's transparency in reporting, whether it's board dynamics and so on. So we are quite happy in general, whether, from an ESG perspective or a diversity perspective at the board level. I think there's more work to be done there, but it's going in the right direction. And, I don't think there's a hard reset on that front that we're talking about in 2022 or 2023. Also, I know we're talking a lot about resets and changes, and I know that makes for good headlines, but by and large, the 80 portfolio companies we have in India and Southeast Asia, those founders started several years ago. They continue to persevere and toil day in and day out, and work hard and make the hard decisions. So I really don't want us to paint their work as, in 2021 or 2020 as bad work, or this year as good work. It's all steady work. They continue to build very strong companies, and really proud and excited that technology and the technology sector in India is contributing to the development of India. I think that is what drives me and drives us a lot. And it's really happening. Healthcare, education, transportation, mobility, financial services. I mean, you name it. Technology has had such a big impact over the last 10 years, and it continues to do so. So there's a overall very positive picture, in my opinion. And cycles come and go, and just have to continue building.
Without a doubt. I mean, we've seen this ecosystem develop over the last 20 years here on Young Turks. So without a doubt, this is for real. There's no taking away from that. And as you point out, there will be up cycles, there will be down cycles, there will be good times, there will be bad times. But that's what life and entrepreneurship is all about. But Vaibhav, I want to address the governance related lessons through 2022 and you know, what that portends for the road ahead with you. And I also want to understand from each one of you, you know, to Dev's point, I mean, for me, if I could call it that, the sleeper hit of 2022 for me was really the space tech story. And I want to understand from each one of you what your surprise hits were.
Yeah, so Shireen, let me address the governance part first. You know, we've been very thankful that across our portfolio, and it's a fairly large portfolio of about 200 companies, we really haven't seen anything that has made us concerned, right? So I would agree with Dave that I think from governance perspective, we continue to see you know, very good value systems across our portfolio. And I think it's something that affects the entire ecosystem, right? So if we have good data across 200 companies in terms of good governance, good behavior, good value system, wanting to do everything right, I think that's just going to spread, and we are not so worried about that. You know, there are always situations that are not something that we all expect, but they will all get sort of addressed over a period of time. So I think governance-wise, we're good. Coming to your question about space tech and new areas, I think you know, the most exciting part is the ambition with which Indian founders are pursuing some of these segments. And you know, I spent about 16 years in SF, and I sort of grew up as an entrepreneur there. And when I see some of these founders pursuing space tech and you know, hardware companies and deep tech and sort of AI-first companies, it is just amazing. I think we are at a point where we are just going to see dramatic innovation from Indian founders, and our ecosystem is going to compound far more over the next 10 years. Having said that, from a specific sector perspective, I think I'm most excited about health, actually. There is a lot of really sharp founders who are going after and taking on healthcare, as well as agri along with it. Some really sharp IIT engineers who are essentially saying, hey, what is the largest problem I can solve for this country? And we have, you know, founders like Abhay Singh of Tiki Foods and Radhika of Cradlewise. They're just incredible founders who are intent on solving that problem at scale. So I think we are excited about health in terms of the impact founders will create in India.
Well, gentlemen, thanks as always. We wish you a very happy 2023, happy investing as well. And we look forward to catching up with you in the new year. Dev, Vaibhav and Hero, we wish you all the very best. That's it then on this edition of Young Turks. Thanks very much for watching. Stay tuned. There's a lot more coming up right after this break.